Welcome back to the BA podcast. It's your boy C-Roc here in Las Colinas outside of Dallas at the Ritz. Great place. Check it out. And also check out BA, guys. Board of Advisors, great group to be a part of. A lot of people serving, servant leaders, which I really admire. And today I have my man Dan here. What's up, Dan?
Yeah, buddy.
Welcome to the BA podcast, man.
Thank you, sir.
And also, you know, there's things that happen. I have no idea how to explain how things happen sometimes, but we just got connected a couple weeks ago through a friend of ours. And we had a great call, and she was working on setting up another call for us, follow-up call. And she said, you're going to be in Dallas. I'm like, I'm going to be in Dallas. And I just knew you're going to be here. But I had no idea you're going to be hopping on the BA podcast. So that was cool when I saw that on the calendar. So yeah, great to see you, man. So let's start off, first of all, let's talk about what you're doing right now that has you excited. What's your focus right now?
Oh, man, about 100 things right now. We are having so much fun. I think our big focus right now is really getting people understanding how Bitcoin works, Bitcoin mining, getting them excited about the fact that that's a great asset. And then the tokenization of businesses, real world assets where people can tokenize them, people can trade them worldwide. And then what we do is we couple the safest asset in the world, which is life insurance, with the highest producing asset in the world, which is Bitcoin, add the mining aspect to it, and it's just fun as heck.
A whole lot of leverage is what comes from it.
A whole lot of leverage.
Yeah, that's what, when I saw the demonstration that you shared with me, I just was like, leverage. You know, and so a lot of people like real estate and they leverage that. A lot of people, they have different asset classes that they look at. But when I saw this, it was like the trifecta. You know, have you used that word, the trifecta?
All the time.
Yeah.
In fact, I just shot a video, just a few days ago.
Yeah.
And the trifecta.
Yeah. And, you know, when you mentioned tokenization of business, can you explain that? So for people that don't know what tokenization is.
Probably the easiest way to think about it is just shares of stock. Instead of shares, they're tokens. So I can take a real world asset. I'll give you an example. We have a student housing complex at Texas A&M. We're tokenizing it. Basically, we break up the student housing into tokens. We're actually going to break it out per room so parents can actually invest in their child's room.
Right.
But then once you own the token, it's just like, again, shares of stock. You get the distributions, you get the appreciation, you get the income, whatever that particular token.
So token meaning it's really like how it is kept track of in a way, and it's kept track on a blockchain?
Yeah, exactly.
Right. So it's a ledger, a digital ledger versus somebody filing it in the courthouse that they have title to something.
Exactly.
Right?
We get transparency, we get safety, we get worldwide access. It's really the future. I don't know of the NASDAQ anticipates $160 trillion in business assets being tokenized in the next year and a half, 2 years.
And really, it's just a technology shift.
It is.
It's really all it is. So for people, sometimes they hear tokenization, they hear crypto, they shut down because they're like, oh, I don't understand that. And then they just pull away. But if they can really understand, it's just a shift in technology of how things are recorded, and it is safer, more transparent. And
yeah, and I mean, if you have investors, if you raise capital, if you have an asset that appreciates, there's no reason not to look at tokenization right now. Now, obviously, if you're just a family and you own you may not need to tokenize, but if you're a family office, a business, again, capital raisers, hedge funds, they all should tokenize, or at least definitely take a look at it.
Yeah. And, you know, I was in the mortgage real estate business for 20 years. And when we did business in Pennsylvania, for example, it took forever because they had to send somebody down to the courthouse to do the abstract and title search and all this. And it took forever. And I was just like, in this world that we live in right now, this is absurd. Like, and I think the mortgage real estate business is always behind. It's archaic.
Sure.
But I noticed that, and I saw the advantage of this when this started to come out a few years ago. I don't know how many years now, 8 years now?
Well, it's been a while, but really it was so hard.
Yeah.
In fact, what we do, we probably couldn't have even done 18 months ago.
Yeah.
This world has changed so fast, so quickly. And now anybody, anywhere can do it. But the honest truth is, like a title, right? Mm-hmm. You were just mentioning how long it takes. Yeah. You transfer a title in a token in
seconds.
Yeah.
Now,
anywhere in the world.
Now, some people have security concerns, right? And they hear quantum computing and how that's going to come around and that can crack codes that take 500 years to do in a matter of 5 minutes. I don't know. but how do people reassure themselves that it's safe?
Well, the thing about especially the Bitcoin blockchain, to hack that, you would have to, I don't even know if, I shouldn't say because I don't know enough about what quantum is capable of, but it's going to be so much easier for quantum to hack banks and brokerage firms, and they're not even going to mess with the blockchain for years.
Right, so that's down on the priority list. So,
yeah.
Okay, so they should be more concerned with their bank account and their investments versus
all day
that.
long. Yeah.
Okay, and then you got into this how? How did you start, I guess, first of all, how did you start mining Bitcoin?
Well, that I owe to my partner, Justin, who has been doing it since 2011. We built this student housing complex that I was talking about at Texas A&M. And when you own real estate, you're always talking about cash flow. And he says, hey, Dan, I've been mining Bitcoin since 2011. So what we did is we created a mining company and essentially attached it, or the ownership, to our student housing. Started producing all this cash flow. I'm like, holy smokes. I said, do you know how many clients I have that would love this? Yeah. So coming from the investment world, I mean, I started as a stockbroker in '86. So I had thousands of clients across the country. We started just talking to a few people. We ended up building 27 mining companies for my investors, and then decided this would be better if we do it all together. So we pulled it all under one roof. We gave shares to our investors so that they are still part of it. And now we just are going crazy. We're building our own. So our token should be released to the public in the next, hopefully 60 days or so. But now people can own the yield on mining, which is one of the most profitable things you can do, and one of the safest things you can do.
Yeah. And can you kind of speak to the leverage of mining versus going on Coinbase or some other platform and buying Bitcoin?
Yeah, well, you can go buy Bitcoin. What is 110,000 or whatever it is today?
103, by the way.
103, okay, good.
It's okay. That's good.
We love
it
when it goes down.
It's a good problem.
We get to mine more.
Yeah.
So if you own it, great. And look, I'd buy it at 150, 200. I'll buy it at $1 million. But the reality is, if you can mine it for, let's just say, even half the price. So if we can mine it for 50,000 and put that in your wallet, it's a pretty good return, and it gives you a lot of room for volatility. Just like I said, it was 110, now it's 103. Well, it could drop all the way down to 50. Yeah. You're still okay.
Yeah, you can only mine so much though. If somebody really wanted to put gasoline on the fire because they could leverage it with mining, are they limited though to how many they can produce it?
Well, Bitcoin's limited, right?
Yeah.
There's only 21 million.
The mining
ever.
of it is. The
mining is all about the transactions. How many transactions are happening?
Yeah.
Think about being the computers for Visa, MasterCard. Mm-hmm. As long as transactions are coming in, plenty of room. Mining is competitive in the speed and the computing power that you give to the network. So that's where our advantage is. We give the network huge computing speed. So we actually have about a 4x advantage to any mining company out there.
Okay. And so the transactions that it's validating are Bitcoin transactions only?
Yes.
Okay.
Yeah.
Okay. Yeah.
Now you can get miners in other cryptos, but we tend to stick with Bitcoin.
Right. So a miner, I mean, when it's mining a coin, it is only validating transactions on that coin.
Yes, exactly.
Okay. Yeah. Some people didn't know that, I'm sure, because I wasn't sure. And so, all right, you had a background stockbroker, you get into real estate, and then I've heard some other big names out there starting to mix multifamily with crypto. Okay. We don't need to say any names, but they're doing that and acting like they came up with it.
Oh,
right. But you guys have been doing this for a while now.
Yeah.
Yeah.
That's okay. We'll give them credit.
That's okay. Who cares, right? As long as it's working. But how long ago did you start it with the student housing?
About 5 years ago.
5 years ago. Okay.
Yeah.
And you noticed it. And were there any unexpected things that happened once you came up with the idea?
The unexpected thing is probably just technology changing so quickly. Yeah. The ASIC computer, as an example, the speed, I mean, it tripled since we started, and it's going to double again in January.
Right.
So one of the things we did is we designed a reinvestment program right into our token, because if I go put $500,000 into mining today, I'm probably going to need to upgrade those computers about every 6 to 8 months, at least a few of them. And so what we did is we built in a reinvestment, if you will, so that we're constantly going to get the latest and greatest for our investors.
So it avoids a capital call, right? It's like a contingency in real estate, right? You created a contingency fund, but so you knew, not really contingent, you knew you were going to have to upgrade.
Even in stocks. I mean, you look at this, you look at the largest Bitcoin mining companies out there. When they need to upgrade, they got to go do another raise. They dilute their shareholders. The shareholders get ticked off. But they're between rock and a hard place. Do we upgrade or do we get ticked off because we eliminated that.
Right. And so when you're working on this and it's working so well, like, do you really need anything else? You said you got a lot going on. Do you need anything else? Well,
that's what took us into tokenization.
Yeah.
And the realization that probably the thing that the world needs right now is a stable coin, because right now the stable coins are backed by U.S. Treasuries, which go down 10% every year. And it's just hyperinflation, and it really there's no worth to them. So we wanted to create a stable coin that had actual backed up value. And so that's where this copper coin came in. So we'll create the first stable coin backed by copper assets.
So when you talk about your coin, the tokenization of this, it's basically a hedge fund. It's a hedge coin in a way, because it's filled with multiple things versus just Bitcoin.
Okay,
right?
I see what you're saying.
So you have Bitcoin, you have real estate, and you have life insurance. Bitcoin, is that just two, or what's the third one?
Well, so what you're really talking about is our platform. So we have a wallet, we have an app, and on that platform will be all the different. You can get copper, you can get your life insurance, you can get the token for mining. We have probably at least a dozen companies that we're talking to right now, all different kinds of fields that will be on that platform.
But the token itself is just based on Bitcoin.
Typically, our token is based on mining.
Mining Bitcoin.
Mining Bitcoin.
Okay.
That's our token.
Okay.
The copper token is based on copper.
Okay.
The real estate token is based on real estate.
So you don't have just one token. You can't have a token that has all three things feeding into it?
You could, but it's probably a little more complicated than it needs to be. It'd be easier to keep the assets divided than to try to.
And then the platform can be the hedge.
And then the platform.
Okay. That makes sense.
So you could, as an investor, you could walk in there and say, I like diversification, so I'm going to buy 12 of these things.
Right.
Or whatever you want to do.
Okay. These good questions? They're just flying out of my head. Like, I'm just trying to figure out, wrap my head around it.
Well, this is what everybody's asking.
Yeah. And then the other thing I was wondering about when you go forward with this is the person out there that's loving to hear about this. They're like, yeah, this sounds great. Where do you need to be financially to really start working with this?
So right now, because of the way tokens are issued, they're typically issued in what's called a Reg D under the SEC. Mm-hmm. So we have to live by SEC rules. For the most part,
accredited investors. Okay.
For the most part, you need to be an accredited investor that can hold the token for 12 months. The beauty of this thing is after 12 months, you no longer have to be an accredited investor. Anybody can purchase it, and it can be worldwide.
After the token's been open for 12 months.
After the token's been open for 12 months, yeah.
Okay. And you want people, they're holding it for 12 months? Mm-hmm. They can't do anything.
They can't sell it. They can't do anything with it, but they get all the yield off of it. Right. Do anything you want with the yield.
Okay. So this is where you show me, and to simplify this, you have $300,000, right? You take
good memory.
You take $100,000 and you put it into a life insurance, overfunded life insurance policy, right? A whole life. And then you put $200 in the token, mining Bitcoin.
Right.
And then you can take the yield and buy more life insurance as the yield comes off.
Well, in a life insurance policy, you typically need to pay premiums for 7 to 10 years.
Right.
So taking that $100,000 example, we want to figure out a way that if they couldn't come up with 100 every year,
the basic
token will do it.
The minimum premium.
The minimum premium.
Right. You have to, but so you can overfund it.
Sure.
But the minimum.
And we don't even like to think about a policy that's not overfunded.
Right.
I mean, I'd rather put the money in. Well, as an example, I put a bunch of money in my policy last week. I'm taking it out next week.
Borrowing it.
Yes.
Yeah.
So you want to definitely overfund. But what we've done is we've built this token to where it could pay those premiums for you going forward.
Right. And then you're paying the premiums, you're overfunding it, and then you can borrow against the life insurance money that you have in there, the access.
And put it right back into
Bitcoin or the token. Yeah. And then just cycle it.
Yep.
Right. So what could happen if Bitcoin does go down to, let's say, 30,000? We talked about this. You still have leverage in mining, which helps you. But if it goes down to 30,000 and you're not yielding anything at that point, right?
Well, so that's the beauty of Bitcoin is if right now, let's just easy numbers, we mine $100,000 Bitcoin for 50,000. If Bitcoin goes to 30, we'll be mining it for about 10.
Right.
So there's always that ratio. So wherever it goes, we'll be mining it for less than its current market price.
Right. Okay. But here's an idea that comes up now. So you have a token based on Bitcoin mining. It still has its own value, right? It's not the value of Bitcoin. It's the value of the token. Yield. But where's the yield come from? Just so people can understand.
The value of the yield comes from the difference between the cost of the Bitcoin and the price that it's selling for.
And when do you realize that yield?
Every month.
Okay. Every month it reconciles?
And we paid in Bitcoin. So a good example is we're probably going to pay somewhere between 2.5% and 3% a month in Bitcoin.
Okay.
So I put 100 grand in, I'm going to get about 2,500 to 3,000 a month in new Bitcoin that I could turn around and sell and go spend it. I can use it for my rent, my car payment, whatever. You do whatever you want with your yield.
Okay. And people have heard of this infinite banking concept using whole life policies in the past. But most people, when they were talking about it, was this is bank on yourself kind of thing. Let's buy things with it, buy your car with it, buy things that aren't assets. Your whole idea is, why would I do that? Why wouldn't I just borrow against it to invest so that you start a cycle?
Yep.
Compounding cycle.
Yeah. So about 2005, I picked up really quickly. I bought my first car using my policy. And I'm going, oh, this isn't that much fun.
Right.
So I said, forget this. We need to be using it for appreciating assets that produce cash flow. I'll go borrow for my car at 3% at the bank. Let my policy go do an asset that makes 10, 12, 15, 30% a year.
Right.
And so, so infinite banking has become infinite investing now in our minds.
So what could possibly go wrong? Let's play devil's advocate for a second though. Like really, what could possibly go wrong with this?
Bitcoin goes to zero and we get our money out of the policy that will cover our investment basis at some point.
Okay.
Going to take us a few years to do that. But Bitcoin, if you think Bitcoin's going to zero, you probably shouldn't even be looking at this, right?
Right.
But that's our worst. And then, of course, we always have the death benefit at the end of the day. So we're not going to hurt our families by doing this.
Right.
Everything goes to pot. We die. We get it all taken back.
Well, we're up against the clock here. So I want to ask one more thing. I know nobody knows, but where do you think Bitcoin came from? Like, do you think there's all kinds of conspiracy theories out there? It's the CIA, it's this and that. Like, where do you, like, if you had to take a guess and it was a free guess, and if you got it right, you would win $500 million. What would that guess be?
I'll never get it right, but I always joke that it's Jesus.
Okay. That good. That's pretty good.
He came down, he created it and he left.
Yeah. But do you like,
I really don't know.
I sit there, it's like kind of thinking about space and how big space is, right? And a star, by the time you see the star, it's been millions of light years, right? It's kind of like that because when you start thinking about this, it can take you down rabbit holes, but your mind just can't even comprehend. Like, how could somebody create something?
I know. It is incredible. And the reality is, what I like about it is because we don't know we don't have a corporation behind it. There's no president making rules. There's it's just is the free market. And I just love the free market.
And how did somebody stay anonymous with that?
I don't know.
It's just crazy because people can't keep their mouths shut. Let's face it. Like somebody does something like 1/1,000,000th of what Bitcoin is. And they can't keep their mouth shut. They got to brag about it, right? Like this just blows my mind.
It blows
human
my
behavior
mind too.
Doesn't make sense with human behavior.
I know. And he has, I want to say he has, I'll get this wrong, but he has like 6 accounts with 1 million Bitcoin in them. So one day, if we ever see somebody attaching those coins, then we may know who he is. But
and then why did you say you would buy it at 250, $1 million? You'd still be buying Bitcoin.
Oh yeah, because I think it's a constant. I'll kind of go with the Michael Saylor philosophy. I think it does at least 30% a year for the next 150 years.
Yeah.
Yeah.
And then I got one more question and we'll wrap it up, Carl. Carl's like 5 minutes. So here's something. It just went down to like 103 today, right? It was at 120 something.
Uh-huh.
What really causes it to drop?
It's just like any other market.
Emotions?
It's just sells. You got to realize you got half the world are institutional. They're smart. They don't sell it. You got the other half that's still trading it thinking they can capitalize on a movement, or they'll short sell it. What I think is going to ultimately happen is that institutional investors are going to take over the Bitcoin ownership. We're going to see probably a lot less volatility as we go forward. But volatility is kind of good. It keeps everybody waking up. And like I say, days like today, I'll mine more Bitcoin than I would have yesterday at 110.
And there's going to be a certain point where it's not as volatile and you're not going to get as much yield.
Right. Well, the yield's never there with Bitcoin. That's what we created. We created the yield off of Bitcoin. We're the first token that actually has yield on Bitcoin. But you'll get the appreciation. And that's why people buy.
Well, that's what I mean. Yeah. So I was I'm
with you.
Yeah.
But it'll be the digital gold. It'll people where you store your wealth.
Yeah.
And that's what.
Well, Dan, I love this stuff. I was telling some people about it, and I'm looking forward to. So where can people go deeper with you on it if they're interested in it?
Yeah, best place is just start at my website, wisemoneytools.com. But eventually, you want to get into any of the social media channels that I'm on, and just watch videos, get educated, then reach out to me. I'm Dan at wisemoneytools.com, and love to talk about this stuff all the time.
Awesome, man. Good job, man. Appreciate it. Guys, that's the BA Podcast. Your boy C-Roc here with Dan, talking about the tokenization of Bitcoin mining. Amazing stuff. Make sure you like and follow on your favorite podcast platform, the BA Podcast. Until next time, it's your boy C-Roc signing off.